All right. I think it's go time. Actually, we'll have some more people trickling in, but welcome everyone. This is the April version of the Escalon's Meet the VC webinar series. We've got Julian Castelli from Next Coast Ventures joining us. And um, and then I'll introduce, we've also got Garrison Gowan, who's with Cake Equity, one of the newest, best cap table management softwares out there. We have another sponsor in Gunderson who's not quite here, but Garrison, why don't you give us a quick introduction before we get started?
Yeah, sure. Welcome everybody. Mike, team at Escalon. Thank you guys for allowing us to participate. Like Mike said, I'm Garrison Goins. I head up U.S. partnerships here at Cake. Cake, we're transforming equity management for startups and are the trusted platform for over 11,000 of them worldwide. We essentially, simplify cap table management and effortlessly facilitate global stock options, stock grants, and streamline the generation and e-signing of legal agreements and offer docs. So our seamless solution and user-friendly experience makes managing and understanding uh, your equity easier and more affordable than ever. So we're committed to ensuring teams are not just holders of equity, but also knowledgeable participants in their company's growth. So if you're interested in, discovering how Cake can empower and motivate your team using equity, feel free to reach out to me at Garrison at cakeequity.com and or feel free to visit cakeequity.com on your own. Thanks.
Great. Thank you, Garrison. And we will put some content in the chat with a link to Cake Equity's website, just so everyone's got access to it. And just so everyone knows, I know everyone probably found this webinar, has seen the branding for it. Escalon is the presenting sponsor. I'm our head of partnerships. And what we do is an advisory, CFO, bookkeeping, financial modeling, taxes, HR support, recruiting, all of the following things for early stage startups. We'll work with founders who have just incorporated all the way through, through their IPO. And we have 50 full-time CFOs. A lot of them actually prefer to use Cake Equity as their cap table management program. So that's a little plug that we've got for Garrison, but we will dive into the content. I want to introduce everyone to Julian Castelli. Julian is a venture partner with Next Coast Ventures. So a little bit interesting of a role for us. But Julian, why don't I let you kind of dive into it, give us a quick introduction on yourself.
Sure. Thanks, Mike. It's great to be here. Great to be here with everyone. Yeah, I'm a venture partner with Next Coast Ventures. Next Coast Ventures is an early stage venture capital firm. We tend to invest in primarily Series A, Series B, occasionally some seed. And we are unique in that we really like to focus on businesses that are beyond the traditional money centers. So the name of our firm is Next Coast Ventures. We look for Next Coast markets. We believe that there's innovation all over the world and in the United States, beyond the coasts. And so I'm here in Park City, Utah today. I represent the firm in Utah. It's one of our target markets, and we think it's a perfect Next Coast market. And I support the firm as a venture partner, which means I'm not part of the investing team. I'm part of the team that is value added. When we make an investment, we have venture partners with experience across a number of technology fields and areas, and we're available to help our portfolio companies succeed along the journey.
Great. Well, awesome. Well, I think we're excited about that too. We normally have, kind of like the classic investing partners join these series, but frankly, the point of this is to share with our audience, which is mostly founders, tips, tricks, ways to understand the venture ecosystem a little bit more deeply. So I think the venture partner role, frankly, is a great angle for us to take. I'll stick with Next Coast Ventures for a little bit more. Could you give me a little bit more about like the types of companies you invest in, seed and series, if there's an industry that you guys focus on, anything along those lines?
Yeah, we're generally technology investors. If you look at our portfolio, you'll see probably the majority is SaaS software. We also tend to invest in marketplaces, and there are a number of themes that we like. Doesn't mean that these are the only things we invest in, but there are themes like the future of work, retail revolution, digital health, meaningful interactions that when every couple of years we look look at what we're seeing in the marketplace, what we think the trends are going to be creating in the future, and we say, here's some themes that we're interested in. Doesn't mean we're exclusive to those themes, but we have them on our website so that if one of those matches the thesis of a startup team, that we want them to come and share those with us. We tend to invest in primarily Series A. We've done some seed investments. We tend to not lead the seed deals, but that, occasionally we'll do that. And we'll also follow on with Series B investments.
Great. Okay, cool. And then can you talk a little bit about just like the geography that you guys focus in, like the idea of the next coast?
Yeah, that's kind of in our name. So, we believe it strongly. So again, obviously the coastal markets of kind of the Bay Area, New York and Boston have been the leaders of innovation and venture capital funding for the last 15, 20 years, probably even longer. We're a young firm, but we were started with the explicit expectation and the thesis that there's great innovation happening across the country. And a next coast market like Salt Lake City, Utah, like Austin, Texas, like Miami, Florida, even though Florida is on the coast. When we say it, we're trying to define the next coast beyond those three money center hubs where there's so much innovation and there's plenty of venture capital. Historically, these other markets that also have innovation were short on venture capital. And so the firm was formed to try to address those markets that have less access to capital, but still, we think, have great innovation. And so that's the name of Next Coast Ventures. And the reason I'm part of the firm is that Next Coast looked at Utah as an up and coming market that they're super excited about. They think it's a perfect Next Coast market. And they invested in me. So we have a presence here in Utah, and I can meet with entrepreneurs on the ground and help find exciting companies for us to invest in.
Great. Okay, that's awesome. And we already got some activity in the chat of people that I'm guessing would fall into some of the markets that you guys are interested in. I see Austin, I think, a couple times, Jacksonville, I think someone from Kenya. I don't know if you guys have considered that, but at the end of this, we'll include the chat ways to get in touch
That's
with
another one
Julian.
that might be on a coast, but a different coast. But
Right, yeah,
we tend to be U.S. investors. We're a small firm. We have a little over 500 million of assets under management, and so we haven't done a lot of offshore investments at this point. Doesn't mean we won't in the future, but yeah, we tend to focus in the U.S. In the next coast markets.
Okay, I love it. I love it. And we'll let everyone know ways to get connected with Julian, Next Coast Ventures, and then also, I guess, perfect transition here into I know you made a very conscious decision, started as an operator, became a founder, then switched over to being this, venture side of the ecosystem, supporting founders. You started a business called Growth Elevated, which I think goes hand in hand with that. Why don't you talk a little bit about the motivation behind starting Growth Elevated, what Growth Elevated is, and how people on this audience could get involved?
Yeah, if it's okay, why don't I go back one step and just tell you a little bit about my journey into entrepreneurship, and then then it goes there. So I was a corporate executive, and about 17 years ago, I made the leap into entrepreneurship, and I moved to Utah to launch a technology company. That was a technology company that was helped commercialize e-commerce for vacation rentals. We were a marketplace called Vacation Roost, and then we created an e-commerce tool called LeisureLink that helped suppliers of vacation rentals interact with the major distribution channels. And so that was my entrepreneurial journey. We had a roller coaster ride. We had some big successes. It was exciting to be part of the birth of e-commerce for this huge new category. And we had some challenges like all founders do. And so when I finished that journey, I realized that I'd learned so much, and I was just seeing so many people get into technology. But the great thing about what's been happening is that there are a lot of first-time founders coming from either just early in their careers or coming laterally from traditional business to innovate, to put businesses and operational muscle behind innovative ideas. And I was seeing so many people doing that, and I had the experience of going through it, good, bad, and different. And I really enjoyed talking to those people and helping them on the journey. And so I decided to start working more in SaaS software in particular. That was a field that with LeisureLink, that we were a SaaS company. I loved the business model. I saw the power of it. One of my good friends, Byron Dieter, was one of the early champions of SaaS. And I remember talking to him both when I was at my own SaaS company, and then afterwards I said, yeah, there's something here. I'd love to help you, dive into this and help companies do it. And he was kind enough to invite me to come join him at Bessemer Venture Partners, where I got to work with the cloud software team and really get to see some of the best SaaS companies in the world, and be involved in some of the early thought leadership that Bessemer was putting out around best practices in SaaS, creating SaaS metrics. How do you evaluate companies that don't have profit yet, but they have great potential in this new model, which is SaaS? So that was a fantastic opportunity. I'm grateful to Byron and the team at Bessemer for inviting me in. I spent 2 years there seeing some of the most exciting companies in the world. And one of the reasons I was invited there was, again, just like Next Coast, they had a thesis that Utah was an up and coming market, and they were excited about it, and they wanted to have someone here in Utah. And after I left Bessemer, I got connected with Next Coast Ventures very, very quickly thereafter, again, as the thesis that we've described earlier. Next Coast was an emerging, just a starting young venture firm. They wanted to focus on markets beyond Silicon Valley, New York, and Boston, so the Next Coast markets. And they liked the experience I had both as a founder entrepreneur and working with Bessemer. And so they said, why don't you come join us and represent us here in Utah? And so I've been doing that as a venture partner, which is a affiliated role. I'm not a full-time employee of Next Coast. I'm affiliated with them. But what I do day to day in my everyday life is I help coach and mentor and work with entrepreneurs, CEOs, and founding teams and executive teams. So I typically do that as a board director. Sometimes I'm the board chair. Sometimes I'm the independent board director. Sometimes I'm just brought in as an advisor and coach. So, it has a lot of names. The best name that I think about that can be encompassed in all those things is basically an operating partner. So I'm a partner to the founding team. I'm also a partner to often the venture fund or the PE fund that's made an investment. And the fund will generally like to have me participate as someone with some experience who can help the founding team, see around corners, anticipate challenges, expand their team to, with a broader network. And then the management team, the proposition to them is, here's someone who's been there, who's done it, who understands just how hard it is to be an entrepreneur and to create innovation where it didn't exist before. And I'm an option to help hopefully accelerate their path to success and be in their corner, helping them as a coach and an ally. And so that's what I do now as an operating partner, and I do that with companies primarily in that growth stage of Series A through D. I'd say in size, it typically is around 5 million in ARR to 50. That's my specialty. I help people, accelerate through those stages and make sure they understand how to successfully get to those stages. So that's what I do, for my day job. And you asked me about Growth Elevated. I'm happy to speak about that.
Yeah, let's do it.
So Growth Elevated, because of where I am in the intersection of startups looking for capital, growth stage companies that have capital looking for help to climb the mountain to the next stage. I talk to a lot of companies every day. I've worked with half a dozen companies at a time. I see a lot of overlap. I see a lot of the same challenges. I see a lot of connectivity that I think can be very valuable. And about 7 years ago, I started, I'd say, an annual dinner up here in Park City, Utah. I live in beautiful Park City, Utah, so people love to come visit. And I invited a bunch of technology executives to come to my house and have dinner. And it was turned into a ski weekend. And what was interesting, it turned into just a really exciting connection of people. We're all facing the same challenges, all facing the same kind of milestones, and whether it's raising capital or getting to that first 0 to 1 or getting 1 to 3 or 3 to 10. And we were having, it was like a mini SaaStr with about a dozen people, sitting on chairlifts or sitting in bars after skiing and having just really great conversations. And people were just saying, hey, this is really, really good. Can you keep doing this? And when I turned it from a dinner into an event, is a funny story. It was during COVID. I had, we were all sitting there watching it develop in January of, I forget, was it 2021, 22. And I remember sending an email out to everyone saying, hey guys, the dinner is off this year. Obviously we can't travel. We can't get together. I had about a half dozen people email me and say, hey, Julian, we've already booked our tickets. We're coming. We're just going to stay in your house. And so, they did come and we had a great time. It was a little smaller than usual. But at that point, they said, why don't you just put this on the calendar and lock it in? Because we get so much value from this. We want to come and meet other entrepreneurs. Obviously, we want to come and ski in Park City. We enjoy that as well. And so with that feedback, we decided to make it an official event about 3-4 years ago. And so it's a 2-day event. We invite people to come in. There's a couple days of skiing. We have some happy hours, and they're all the people who come are all founders and C-level executives from tech companies, call it in that, maybe 1 to 50 million. So we have some earlier stage companies come, but, they're all on that path. They're either looking for venture capital or they've already gotten it, but they have a next milestone to achieve. They're trying to work out product market fit, or they're trying to scale their go-to-market, and they're innovating, right? They're changing the world with their products and their companies. And so that group comes together, and we have some structured networking and problem solving. And the value to me, in addition to everyone having a good time, is when I see people making connections, and then I hear 3 months later, oh yeah, we talked to someone at your conference, Growth Elevated. We ended up hiring that person. That's our COO now. Or we talked to someone who referred us to someone else, and that person is now helping us restructure our go-to-market team. Or the list can go on. We found our CFO. Those things are really great value add that make me say this is worthwhile. We're going to keep doing this. And so we have the event every year, and we are slowly building a community. And it's the same group of people. It's CEOs and founders in that growth stage of technology companies that can benefit from a peer community and can use that community to answer questions, to accelerate their learning, find resources, etc.
Great. Okay, that's awesome. And so it's focused around I imagine you're highlighting the event because that's really like the anchor of it, but it seems like much more of a community that you've built where a lot of the cross learning happens, founders learning from executives, things like that. And that might dovetail back into just your role as a venture partner at Next Coast, specifically geared at helping founders. Actually, before I ask you sort of the classic, tell us about what your expertise is. You had mentioned that there was a ton of learnings when you were joining Bessemer. Was there anything that was like extra challenging about kind of inserting yourself? I mean, each founder has a different story, different challenges ahead of them. So for you to kind of do this, like, a one-trick playbook doesn't necessarily always work. Was there any like challenges that stuck out?
Yeah, that's an interesting question, right? So a one-trick playbook is something that sometimes I envy, because there are operating partners that say, hey, I am go-to-market. I'm going to help you hire your sales team, and it is specific, right? And there's a great need. I can't think of any company that I've been with that doesn't have a go-to-market challenge like that in time, right? And so there are some people that are specialized in that. I'm a multi-trick. I tend to end up, advising the CEO from a board level. So my sweet spot is probably the board chair level. And so I have a lot of areas of expertise, and that becomes difficult sometimes, right? What I just described, the biggest way I can help founders and executives is candidly with my network, right? I've been around, I've got a lot of people. And so that's why I started with the event, because I know a lot of great people from different funds. I know a lot of different executives at different stages on the journey. And when I can say, hey, the problem you're trying to solve right now, let me connect you with someone who solved this problem 2 years ago. And why don't you go visit them and watch what they did, try to learn from what they did. Maybe that can accelerate your growth by 3, 6, 9 months. That could be invaluable, right? So network is the most valuable thing I offer, and that's why I started with the event. In terms of my expertise, I look at myself as kind of a CEO and founder coach. I help them with overall strategy. I help them with the almost every time with stage navigation. And what that means is I could talk to anybody on this call, quickly find out where are you today and what's your next stage, right? If you're, you raised a Series A two years ago and you're at 5 million, well, guess what? Your next stage is Series B. Where do you have to be to raise a Series B? How much time do you have left? What's your growth? What's your runway left? So it starts out with a series of conversations to quickly figure out where you are on the journey. And then which journey is that? That's the Series A to B journey. And then what do you need to do to be successful, right? You can't run out of cash. How do you get to that next stage? And then where do you have to be from a SaaS metrics perspective, from a growth perspective, from a stage and a team perspective to have an expectation of success, right? And my work isn't going out and helping them raise capital. My work is helping them be prepared well in advance. So when they get to 6 months from needing capital, or even 12 months from needing capital, they know exactly what the scorecard that the investors are going to are going to be using. They know where they sit on that scorecard. They know where they've got to improve, and they are prepared, for that. I'll call it a test, right? I mean, at the end of the day, you're going to go out to the market and test the market to see if people want to make that next stage investment in you. And so my goal is to help companies understand exactly what the rules and the benchmarks are for that test, how to prepare for that test, and then how to, most importantly, how to improve their companies, their stages, their teams to succeed at that. When we go into that often will lead to, hey, we have an issue around organizational design. Maybe we need to shore up the go-to-market team. Maybe we need to shore up the R&D team. It could be the finance team. So I do a lot of work around organizational design, and then I do a lot of work around execution, right? We inevitably find challenges. It could be in go-to-market as an example, and then we'll dive in and say, all right, what do we have to fix in go-to-market to get the results that will allow us to succeed at that next stage?
Yep. Okay. Well, I definitely want to switch gears and kind of have you place you back in the investment decision-making process at Next Coast. I know that's not the forefront of you, but just to give everyone an idea of how they're thinking about things. But I'll ask the question that I asked you before we started about, there was a poll that was done on this chat. A lot of people are pre-seed. That's the founders that are in here. That's what they're trying to raise. Then there's seed rounds. There's few Series A. I know Next Coast, I think you said, goes as early as the seed rounds. So how do you differentiate from pre-seed to seed?
Yeah, that's a tough question because it seems like it's a moving target. And so I don't know that I will clarify the answer for our listeners today, but at least explain what I've seen, right? When I started doing venture capital 7, 8, 9 years ago, it was very clear: Series A, Series B, Series C, and then seed was just developing as a category. And it was developing because people wanted to be able to have a round before Series A. And I think over that time now, we've also had pre-seed develop. So Series A used to be your first round. And then, seed came in, said, no, this is before you have traction and revenue. It's a seed round. And now we have before you have before is the pre-seed. And so I can give you my current understanding, but I don't purport to have the perfect definitions. Let me tell you where I think Series A is, and that's where we focus at Next Coast Ventures. Series A typically is a company that probably has had either a pre-seed or a seed. And by the way, before pre-seed is now friends and family and angels, right? So you've got friends and family, you've got angels, you have pre-seed, which is probably an institutional round, but a small one. And you got seed, which is now an institutional category. There's a lot of great seed funds. And then Series A. For us, Series A is a company that's probably in that $2 to $4 million range of ARR. It could be a broader range, but we're looking for evidence of product market fit. So it's not a couple of folks in a garage with an idea. That's probably back towards that angel pre-seed concept. But we're looking for that evidence of product market fit. And for us, I'll just use an example. If you've got $2 million of ARR, that proves a lot. It proves that you've gotten a handful of customers to sign up and sign up for your product. Depending on how long you've been doing it, we were looking to see if they've renewed for your product, have they expanded, right? but a couple $1 million of ARR speaks volumes. Number two, we say, okay, what's your backlog looking like? You know, do you expect to grow? You know, typically companies are growing, you know, sometimes triple digits, right? At that stage, because you can very quickly grow from 1 to 2 or from 500,000 to 1 million with small numbers. So these are going to be high growth companies, and they've gotten the hook. The hook is caught, and the fishing rod is making noise. So there's some excitement, right?
Mm-hmm.
So what
Okay.
we focus on then, we say, all right, you've gotten some product market fit. Congratulations, this is super exciting. The way we evaluate at that point is, all right, how large is this market? How strong is your value proposition? You know, what's the likely competition to look like? And one of the things that I really love to talk about is there an unfair advantage? Is there something about your business or your business model or your product that's going to have an unfair advantage? An unfair advantage could be network effects. An unfair advantage could be some of the data that you're gathering, you know, through the solution you're providing up front that will allow you to have, you know, second act successes and product rollouts that can grow in the future.
Mhm.
It's always great to have those. Doesn't mean we always have to. But then the last thing we look at is we are looking at the founding team. The second biggest theme at Next Coast Ventures, if the first one is that, you know, in our name, we're a Next Coast investing firm. The
Yep.
second is that we are a firm that is built for entrepreneurs by entrepreneurs. Every one of our partners was a founder and C-level exec at a technology startup. We all understand how hard it is. We've invested very early in the group of venture partners that I'm proud to be a part of, because we just recognize how hard it is and how important it is to help people, not just with a check, but with real operating expertise. We've got incredible venture partners that I'm just honored to be a part of. You know, people like Cotter Cunningham, the CEO founder of Retail Me Not. We've got Brian Sharples, the CEO and founders of HomeAway. So, you know, just great people that are involved, and that speaks to our view, which is we want to invest in great entrepreneurs and we want to support and help them. So that's probably our second biggest theme. I deterred a little bit to talk about Next Coast, but ultimately, when we evaluated an opportunity, we want to understand, are the entrepreneurs what we call glass eaters, right?
Oh, right. Yes. Yes. I remember
We
you
know
saying
that they're going to go through some really incredibly difficult times. How will they react when that happens? There's only so much we can do to help. We want to be available to help, but we want to see some evidence of people that really know their industries, that have resilience, that are not going to, you know, withdraw when the going gets tough, and will continue to iterate and innovate and have that glass eating entrepreneurial mentalities is something that we look for.
Great. I like it. That was going to be my next question. So I'm glad you covered it. Why don't I jump to, like, at Next Coast, and maybe you're part of this process. I would have to imagine everyone is leaning in here, but how do you guys find new founders or new companies to invest in? Like, what's been a successful path? Is it warm introductions? Do you guys have some type of discovery team?
Yeah, well, I think part of that is the group I'm a part of, right? So the core group of Next Coast, we're a small firm. You can look at our website, you can see our partners, you can see our associates, you can see the folks that are full-time in our beautiful office in Austin, Texas. But part of how we expand our network is through our venture partners. So we have, I think it's around 6 or 7 venture partners that, you know, in my example, I'm based here out of Texas to expand our reach. And we all have networks. We're all talking to entrepreneurs and business folks in our daily lives. And so the venture partner network is one way that we find, you know, is kind of expand our net, right? Me being here talking to you on this webinar is a perfect example, right? I'm in Utah. I'm fairly active. I'll go to you know, Silicon Slopes and talk there sometimes. And, you know, I want to let people know that Next Coast Ventures is eager to find great companies and glass eating entrepreneurs that we might invest in here in Utah. And we've got, you know, 7 or 8 venture partners doing that. We also have an entrepreneur network. We have a kind of a sidecar fund that we have a number of our former investors or former CEOs that we've invested in, or people that we know in our network that can invest in our entrepreneurs fund. And that's a broader network of people that can help us find deals. And so we have the kind of that affiliated network of people out there that are trying to spread the word about what we're looking for and the types of companies we're excited about investing in. And then, of course, we'll do things, on social media and our website, trying to let people know that we are out there and when the kind of companies we're looking to meet.
Great. Okay. That's helpful. And that makes sense. So and that's one thing that I think we find, I bet you a lot of founders find challenging, maybe it could be negative feedback about the VC system in general. It's like, it seems like it takes a warm intro to get introduced, but I feel like Growth Elevated is a great way to, kind of stamp yourself with a growth, like a warm introduction possibility, if that makes sense, right? It seems like
I'll speak to that. It is hard. And I remember my friend Byron Dieter actually told me, he said, look, there are so many hard things that it's going to take to be a founder. So if figuring out how to get a warm intro into a venture to me, this is Byron saying,
okay.
is too hard, then we don't want to invest in them. That's the first hurdle on the journey, right? And so it's fairly explicit, right? It's like, look, entrepreneurs got to figure things out. And Byron said this to me early in my venture career. I said, okay, that's interesting. It's like, it's not like we have telesales, right? Or fill in this form on the website, right?
Right.
I think the idea is like just like, look, no one's gonna respond to your email and say, I want to book my first $50,000 SaaS deal with you, right? So you got to figure out how to who's your customer, how are you to get in front of them, and how are you to make a compelling pitch. And I think to some extent the venture process simulates that a little bit. That lesson early in my career was like, someone was saying explicitly, I wouldn't say that we're there at Next Coast Ventures saying that. We want to be out there. I'm on this podcast so people can understand who I am, and my peers do the same thing to let them know we're out here. But at the end of the day, whether you reach out to me or one of my colleagues, we're going to be looking for some validating proof that it's worthwhile for us to dig in and understand your company. And if you can come in through a warm introduction, you're absolutely going to have a faster path and a greater interest than if you just do a cold email.
Okay. All right. That seems fair. That's actually pretty good feedback. I might write that down for future sessions, just if that's the thing that's going to keep you from being a successful founder.
If that's may call it, it's not the first, but it's one of the early stage hurdles. Yeah. And it's actually a good test, right? Because, getting that first customer is probably just as hard or harder. And our success is going to depend on that.
Yep, that makes sense. Okay, cool. Well, then I think this dovetails into it, but thinking about pitches that you've heard from these types of founders, right? We hear the type of person that you're looking for. Is there advice that you could share with people listening here of, things that you should definitely do when it comes to your pitches, things that you should definitely avoid when it comes to your pitches? Just any behavior in and around like follow-ups, things like that. Like, what do you view as like kind of the perfect process for a founder?
I wish I had the perfect process. I would say one consistent thing that I work with founders and executive teams on, and I referenced it earlier in terms of my work, is knowing how you're going to be evaluated, right? There is a specific, if you're a SaaS company, there is a specific language. We don't make that language up to make it a test, to make it difficult. Like I said, I was with Bessemer when they were creating some of this in the early days. It really is, there are metrics that are non-GAAP. They are SaaS metrics, and now there's dozens of websites out there that can explain what SaaS metrics are and why venture capitalists use them. We're not doing it to make it difficult. We're not doing it to make it more challenging. It's a way to evaluate companies that are early stage in this category for SaaS, and they don't have profits. They're not going to be measured by earnings per share like public companies, right? So it's a different set of categories. So the first piece of advice I would say is absolutely understand, if you're raising a Series A, what are the benchmarks and the SaaS metrics that you're going to be evaluated on, right? And understand where you are, right? If you don't have those, maybe it's not the right time to go out and raise capital. One of the things that I think is very difficult for founders to learn is venture capitalists don't go out looking for people who need money. And I'm going to just,
Right.
if you need money because you're out of money, that is not a sufficient, it might be a necessary condition, but it's definitely not sufficient. They're not, venture capitalists aren't looking for people who are out of money and need money.
Mhm.
They are looking for people who are at a stage where their performance, and in many cases their SaaS metrics, is demonstrating that their business has value to succeed at that stage and succeed at the next stage.
Okay.
Venture capitalists want companies that are flying through that state, that transition marker and going way past. We're trying to find the very best ones. Yeah, of course, the fact that they probably need money and they're willing to go talk to venture capitalists at that point is a necessary condition for a transaction. But if you're raising money because you're out of money, and that's your reason to raise money, save yourself some time. People aren't looking to make those investments. They're looking for companies that that need money, but are demonstrating that they will be successful in the next several stages based on the performance of the business today. And at the earlier stages like Series A or seed, it's going to be early stage metrics in terms of customer feedback, in terms of customer retention, in terms of ability to get that initial handful of sales. It's going to be pipeline. How many people are interested in your business, right? How did you achieve those sales? Are they founder-led sales, or are you scaling up a sales team? Or is your product just so fantastic and in value creating that people are coming to you to buy the product, right?
Mhm.
We're looking for those pieces of evidence. So as a founder, you want to understand what those pieces of evidence or what the scorecards are at the various stages. And you need to go backwards, work backwards, say, okay, how do I get those when I'm having the conversation at the particular stage with a particular investor? I mean, that's a little harsh. I mean, I remember when I was a founder, I was like, hey, I need money and I need to go talk to venture capitalists. And I just was like, hey, the fact that you need money is the smallest part of the reason we're here.
Right. Okay. And just a reminder to everyone in the audience, use the Q&A function if you've got questions that you want us to kind of throw in on Julian at the end. But Julian, I'll ask, I guess the response to that is a founder that's, doing what you want them to be doing. Those types of companies that are, growing, that don't need the capital. That's not why they're fundraising. They're probably looking for investors that have some type of like value add service as well. We talked a little bit about how you help founders, but like, what are some of the things that Next Coast Ventures leans on? I feel like these days, everyone's got something that they say is sort of like their secret sauce when it comes to helping founders. But what do you think Next Coast does a great job of?
Yeah, well, I think it's around what we've talked about, right? The first thing is we're very interested in those Next Coast markets. And then the second is everyone on our team and our expanded team have been in the shoes of these founders and these executive teams, right? And so, there are funds that are made up of, ex-investment bankers and people that are really, really sharp around finance, and they're fantastic capital allocators, but they may not be operators. They may not have walked a mile in the shoes of the entrepreneur. And I think we differentiate ourselves by the fact that our entire team comes from that experience set. And even as an earlier stage fund with, we're not a huge fund with all the resources in the world. One of the first investments we made was in this venture partner team to say, hey, we think it's that important that we want you to have resources. We want to surround you with as much talent as we can to try to increase your chances of winning, once we partner with you. That's our primary differentiator.
Okay. That seems fair to me. And I think it is good. I was actually just talking to someone that's in the space yesterday about the different, how sometimes from a founder's perspective, it might feel a little gimmicky if someone's pushing one service like super hard, like, oh, we can help you find your first couple clients because we've got experienced people who used to do software sales, basically, right? Where I think what you're saying is we've got the connection, we've got the gravity, especially in the Next Coast markets that we focus in, and that's how we can support. Let me jump into a question. I guess we're getting close to wrapping things up, Julian. So if there's anything else that I've left out that you want to drop in there, but Well, why don't I ask the overarching question? I don't think we've talked specifically about it, but how are you guys at Next Coast kind of viewing the market, right? I mean, it's changed a lot in the last 2 years, the last 4 years, the last 7 years. You could probably say that about any period of time. Are you guys optimistic? How active are you being? It seems like right now it's harder to raise funding than it had been in a couple years past. Maybe that's a good thing. But anything that you guys sort of have, whether it's you, Next Coast, a combination of a talk track of what's happening right now.
Yeah, I'll speak to what I'm seeing, and I think it's consistent with what my colleagues are seeing at Next Coast, which is, look, the last 18 months have been quite an adjustment for the capital markets. And we're talking about the private early stage tech capital markets, the venture capital area from seed to Series A, B. It's gotten dramatically harder. It used to be frothy. It used to be easier to raise capital. The hurdles that are required at any given stage, I think, were a little lower. And there were, I would say, it was probably the best time in terms of supply demand for founders and executive teams to raise capital was that previous peak period that ended about 18 months ago. I think we've all read and lived through the last 18 months and know how hard it's been. Look, the bottom line is, if you're not really on the top decile of performance, it's getting very, very hard to raise capital. I think that you asked about Next Coast. We are very excited by the opportunity because we've raised our fund. We've got fresh powder, and we are available and ready to invest, but we are able to go deeper and really focus our investments in the absolute best companies that we see. Whereas I think, call it 36 months ago, I think anyone in the venture capital field would probably say, hey, it was such a frenzy that there were a lot of deals that we'd get involved in, spend a bunch of time doing work on, and then we'd basically just watch the bidding, create valuations that we thought were maybe detached from the opportunity, and quite often we would recuse ourselves from those opportunities. So now we're able to go at a pace where we can do deep diligence. We can work with companies, find out if they're a great fit with us, and if they are, and we think we can help, and we think that there's a great opportunity in the business and the innovation that the team is creating, we can share why we think that, and we can do it in a pace that works really well for us and hopefully works really well for the entrepreneurs.
Okay, I like that. That's great. And someone threw this question in the chat, and I think you and I spoke about it a couple days ago, but just the investment process for Next Coast. Can you share a little bit about that? Of like I think people are really interested, founders specifically, in like the timeline that it takes for you guys to make an investment, especially now, given like the way the market has changed. And is how long does it take from initial pitch to actually making a decision, go forward, don't go forward? Just, I think it gives people like peace of mind knowing a little bit about what's happening behind the curtain.
Yeah, well, I think I can speak generally. There's a wide range. There are some deals that happen very quickly, but in general, I think the first hurdle is to get in the pipeline. And firms like Next Coast have a pipeline, just like all of the firms that are pitching have a pipeline of investors they're talking to and potential customers that they're looking for. I think that I'm gonna do a quick aside and just say, give you a little advice here, because I think that's where you're asking for. If you look at the funnel for your customers, and if you work with professional go-to-market leaders, one of the first things they're going to tell you is don't shoot shotgun. Refine your target market. Understand who your ICP is, your ideal customer profile, and as a thinly funded startup, you don't have enough resources to go chase 100 opportunities, right? If you can find the 5 of those 100 opportunities that are most likely to say yes because they're perfectly aligned with your value proposition, your ideal customer profile, your target industry, you will do much better focusing 95% of your energy on those 5 deals versus 5% of your energy if those are 5 out of 100, right? Mm-hmm. So that's a kind of a piece of conventional wisdom from sales. I would argue that you can make the same judgment and the same process when you're fundraising, right? It's going to be tempting to talk to 1,000 people. And yes, in fundraising, quite often you do, but make sure you do your diligence to understand which are the top 5% of those firms, or which, I'm not saying I can only talk to five companies when you're raising capital, but understand who's really in your target zone. Do your research in terms of, what kind of companies are these venture firms looking for? Are they looking for your type of company? Are they looking for your type of geography? Are they looking for your type of stage? Make sure you know which ones are really in your IC, ideal investor profile, IIP. So that's the piece of advice I'd say. So, then you've got the hurdle of trying to find out how to make a connection. I just said earlier, we talked about if you can get a warm introduction, and look, LinkedIn is a great tool. You can see what people know me. You can see what people know our general partners, what people know our associates, what people know our analysts. Our job is to find great companies and look for them. At the end of the day, we try to create a wide net. We try to be available so people can connect us. And when they do, and we hear them, we evaluate deals based on our judgment, and the ones that we think are exciting and fit the profile of the firm will pass along. And that process typically starts with a discovery interview from one of our associates, someone on our team. There's a sorting process. I don't know what percentage of those transactions will make it through to in a call with one of our partners. Once a partner is interested, we have a process with our investment committee and how the team gets together periodically and looks at deals. And that process, I think, is fairly typical at most venture capital firms, and it's probably going to take, I would say, 4 to 12 weeks. Hopefully, in the middle to the shorter part of that, but sometimes with people's schedules and scheduling meetings and getting follow-up, and whether the company has all the follow-up information ready, it could take as long as 12 weeks. So that's, not too different than a pretty good sales process, right? If you're trying to sell a prospect, a prospect that you can sell in 90 days is not bad, right?
Yeah, no, I agree. Well, cool. And then concluding question here. Well, actually, just quick one. We've had a bunch of questions about like Tampa Bay and Jacksonville. Are those areas that people, if they're interested, if they're starting a company, like Next Coast will evaluate that space? I guess a little bit further from your wheelhouse, so maybe hard for you to say, but at least worth them.
No, I think that those are Next Coast markets. We've made some investments in Florida. We like Florida. One of our core fund partners is in Florida.
Oh, great.
Okay. And so we're open for business in Florida. We like Florida a lot.
Okay, great. I like that. And what I'll say to everyone who's got the different cities that they're in, check out Growth Elevated. That's the company that Julian spends most of his time doing, building the community. Here, I can put the link in the chat again, just so everyone has it. But that is the community that Julian is building. It's a great way to kind of start your warm introductory period. If you want to get on Next Coast's radar, my guess is if you get on Julian's radar through Growth Elevated, you'll have a better chance of getting in. Let me ask you, possibly the last.
Yeah, Next Coast was a sponsor last year, and one of our founding partners, Tom Ball, was there, and we have a number of venture capital folks and growth equity folks come to that event. It is primarily for founders and their executive teams. We recommend that people come Noah's Ark style. So if you're a CEO and founder, you can bring your CTO, you can bring your CRO. They're going to meet other people that are just like that and peer executives, and so that's the value. But there's always about a half dozen fund investors at the conference, and that could be of interest as well.
Okay, I love it. Let me wrap things up with, normally I ask goals for the firm over the last 12 to 18 months. I'll let you take that either for Next Coast or for Growth Elevated.
I'll give you both. For Next Coast, our goals are to find and pair up with outstanding glass eater entrepreneurs who have the courage to change the world. And if we can help them with our capital and our venture partner operational expertise, those goals don't change. For Growth Elevated, we're building a community of founders and C-level executives that are climbing the growth mountain is the theme we use, because we're here in the beautiful mountains of Park City. And, you know, if people are interested, they can go to growthelevated.com. They can come to our event. They can inquire about joining our community, and hopefully that provides some resources that could be helpful for them on the journey.
Great. All right. I like to hear it. That's perfect. I just dropped in the chat as well. Julian's LinkedIn, Growth Elevated is in there. Those are the best ways to get in touch with him. So I'll wrap things up. Julian, thank you very much for joining us. Like I said, it was great to have you. Great to have a venture partner on this segment. I think, you know, a different perspective, which is good for some of the founders. And, you know, if anything, I feel like people took away a lot. I definitely took away that part that you made about, you know, the warm introduction not being the hardest thing. Same as a sales process, same as getting your first client. So I loved it. But, you know, thank you for the time.
Hey, I really enjoyed our conversation. I hope it was helpful for our listeners, and I look forward to hearing from people if they want to chat in the future.
Great. Awesome. And I'll wrap it up. Just another quick plug for, you know, Escalon, for our sponsors. There was a poll that was done asking if people needed help with CFO services. That's what we do. We've got CFOs that can look over your business model, can help you with kind of like your monthly reporting, get you set up for fundraising, present a you know, organized front to someone like Julian. So we'll reach out for those that answered yes, or, you know, not sure, I think was an option as well. And then just as a reminder, we've got Garrison Goins. He's with Cake Equity. Cake Equity, hopefully this is a good way to describe it, but they're a competitor to Carta. They're lighter weight solution. Our CFOs really enjoy using them. So certainly worth taking a look if you're getting more serious about that. And then we did just have Chase Beckstead join. We missed him earlier. He is with Gunderson Dettmer. Chase, why don't you give us some concluding remarks on how you guys help startups, and then we'll hop off. You're on mute, Chase.
Yeah, no, happy to wrap it up. So yeah, Gunderson Dettmer, for those of you that don't know us, I mean, we're a founder-focused law firm. We do more, you know, emerging company venture capital deals than any other firm in the world. So our entire practice is built around founders, founder needs, venture financings, and everything in between. So definitely feel free to reach out.
Great. I love it. All right, cool. Well, Julian, thanks again. Chase, Garrison, good to see you guys as always. Thanks everyone else for joining, and we will be back again next month. But signing off for now. Thanks.
Hey, I enjoyed it. Thanks so much, guys. Have a great day.
Thanks, guys.
Thanks,
Appreciate it,
all.
Mike.